Hey everyone, thank you for hopping on. This is Jacqui Cooper with CryptoMom2 Talk Show, and I want to welcome everyone back. As everyone who's on the videos, I can see the sun is streaming in, which is why I have my hat on today. For everyone who's on the audio side, welcome. Definitely go over to the video side so that way you can also watch Joshua and myself, as we have our chat today. I will introduce him in a quick second. For those that are new to Crypto Mom 2 talk show, I've been doing this now for now a few years, I guess. And it's been an amazing journey. I have been talking to people all around the globe about blockchain, its creativity, NFTs, Bitcoin mining, altcoins, metaverses, you name it, the trends, everything is happening so fast, it's hard to keep up with as I am doing more and more reading. The topic of today, and the reason why I asked Joshua to hop on, and he's been on my talk shows before, he's in the accounting side, like I'm on the law side. My background's law, but I'm also an educator and I'm also a single mom. And so I'm really proactive about doing research, reading. One, let me just say right off the top, these shows are not financial advice, and you always have to invest at your own risk. Anything in the blockchain involves risk. So you definitely have to do your own due diligence and research. So everything that we share today on this show is opinion. You have to talk to your own consultant and you have to check things out, because it's evolving so fast that what we say now, and when you listen to this in the moment of 2022, it could be different a month from now, from the way that legislation is happening, rulings, that type of thing. But before I get into that, I'm going to hop over and say, welcome, Joshua. How are you doing today?
Hey Jackie, I'm doing wonderful. I'm doing wonderful. It's a great day. Things are looking good. Out here in Texas, we had a little bit of snow, and then it seems like less than a week later, we were right back in the 70s. So things are going great on my end.
Yeah. So why don't you go ahead? Joshua and I are both friends from online. We've known each other for a while, as well as professional associates. Joshua, why don't you go ahead and introduce exactly what you do? And also, I feel comfortable, definitely saying that if you have any tax questions, definitely reach out to Joshua, because he is developing an area of expertise in this niche, and it's important for you to find someone that you feel comfortable with, because like I said, this is a changing area. So Joshua, why don't you go ahead and share with everyone how they can reach out to you?
Yes, definitely. So Joshua Thompson with Thompson Tax Group. We're a tax and accounting firm that really just focuses on tax planning, bookkeeping, payroll, but mainly the tax planning, tax preparation for our clients. Most of our clients are usually business owners and investors in the crypto space, real estate space, or stocks and bonds as well. So we kind of focus on the usual investor and business owner and kind of figure out what strategies they're not using, what can incorporate, what code advantages are out there that they're not utilizing, and then create a tax plan, implement that tax plan, and kind of bring to them how much we anticipate that this is going to save them, not necessarily this year, but year after year after year. So that's kind of our focus and what we focus on. The best way to reach out to me, you guys can email me at joshua@thompsontaxgroup.com. We have our website that's right now getting completely revamped. So it's going to be looking good here, or even better soon with our blog that's going to be having a lot more information towards our ideal client as well. But our website is thompsontaxgroup.com. Any questions you guys have, feel free to reach out to me. On there, you can find out more of my contact information, phone number. You can text us, whatever is easiest for you guys is what we usually like to do for our clients. So feel free to reach out to me anytime.
Yep. And for those that might not have paper and pen, don't worry, just go back to this episode, and his contact information along with all my links will also be on there. So again, we're going to be talking about certain things, and I'm going to kind of go down the list, and we might have more than one episode, everyone. So again, if we run out of time here in our conversations, definitely like and subscribe, because tax is an evolving thing. So, and the knowledge of that. So let's talk about maybe, and again, Joshua, if you want to have
Yeah.
topics that I share, move to another episode, that's fine. Just let me know. But I'm as a Bitcoin miner, I'm really interested in this area. And for everyone, the reason why I got interested in Bitcoin and Bitcoin mining is I realized that when I buy coins on an exchange, that's one category of coin. And for you, Joshua, that might be one taxable type of episode that might be occurring. And as a miner, I'm actually verifying that those purchases are happening. And then I also am buying equipment. So that's a whole nother write-off as a business. And then I'm also earning rewards, which, for the verification of the Bitcoin. So I'm looking at getting, a second machine this year because of what, the success for last year. So for those that, again, everything that we're talking about is in the broad picture.
Yes.
So, again, this is not personal advice. You have to talk to either Joshua on a one-on-one consultant or your own tax advisor. So he's not giving tax advice on here. He's talking in the broad picture. So, so for someone who might be going to an exchange and getting a coin, whether it's Bitcoin or an altcoin, is that could that be taxable?
Yeah.
And subject to what is the IRS is ruling and that type of thing.
Definitely.
All these disclaimers.
Yes, because let's be honest, Jacqui had a good point. It's constantly changing. What's okay today in the IRS eyes may tomorrow new legislation comes out may be completely different. But to kind of answer your question, if you're using fiat, which is our dollar or euro or yen, if you're using that to buy your crypto, that right there isn't necessarily a taxable event. It's you're just buying, you're getting invested in it. Now, when you get ready to exchange that coin to a new coin, or you get ready to sell that coin, that's when it becomes an actual taxable event. And think of it more so as it's going to be capital gains. I know a lot of people say it's property, but when you think about transacting with it, it's a lot easier if you think about it as if it's stocks. Now, it's not 100% considered stocks in the IRS eyes, but when it comes down to the taxation of it, when you're exchanging it, that's the easiest way to compare it to something. Because if you hold it for more than a year, it's long-term capital gains. Anything less than that, we're looking at short-term taxable gains at your ordinary income tax rate, whichever bracket you're actually located in. So that's when it becomes really a taxable event, not necessarily when you buy, but when you sell or you exchange to another coin. That's usually the good first set starting when it comes down to crypto to know how the taxation works for you.
Yeah, and I think that was one of the reasons why I brought up the idea of the Bitcoin mining conversation, because I want everyone to think about, when you start dabbling in this area and you obtain your first coin, you have to think, being very transparent about how do you report and how do you, talk about the income that you're gaining from this. So there's the purchase on the exchange, and then on the Bitcoin mining side, for those that are involved in that, we have the equipment. So the equipment would be depreciated. Is that correct?
That's correct. Right now, so something to keep in mind right now, when you're mining, it's considered, basically business income, subject to self-employment tax, everything like that. And your equipment that you purchase is depreciated, or it gets to be written off all in 1 year, depending on how you have everything set up, and to reduce that income. Now, if they come out and determine that, it now becomes where crypto's taxed not like property, it ends up being taxed like stocks, more similar to it and considered like a stock, then we kind of raise the question of, okay, are we still going to be able to depreciate our mining equipment? Is it going to still be able to be written off? Because now if it's taxed like a stock 100% and considered a stock in the IRS eyes, it's no longer subject to self-employment tax, depending on how you have everything set up. But at the moment of this recording and before legislation changes, it is considered business income subject to self-employment tax as well. And then you get to take the minor as depreciation to reduce that income. And then kind of to talk on, if you're doing a lot of transactions as well through an exchange or just through your wallet, there are services out there that helps you kind of really number down every transaction that you're doing and determine, is it a long-term, short-term, is this mining rewards, and how to classify it. There's a number of them out there. I think me and Jacqui spoke about a few in the past, but you don't have to do it by hand. And I highly recommend do not do it by hand. But after you do it, it's great to still work with someone, because I've seen a lot of times as well that, it's software. Software can make mistakes sometimes. You want to make sure you have someone review it for you.
Yeah, for sure. And again, when you reach out to either myself or Joshua, we can give you the names of the various platforms that we're exploring. And that way, again, we want to make sure that it's the right one for you based upon your own personal needs. Hosting, with, again, going back to Bitcoin mining, if a company, because there are a variety of companies out there, if a company hosts the rig for the person, is that hosting considered a full write-off during the year, or because that's different than the equipment? So that might also help against the income that you are generating.
Yes, and that's another great thing to bring up. A lot of times, if they're hosting, sometimes they'll have like the monthly fee or a charge or something like that. That would also be something you could use to reduce that income from the mining rewards. And a lot of times as well, you potentially use electricity costs or something like that, depending on how you have everything set up. So definitely want to sit down with a tax professional before doing that one. I wouldn't recommend doing that one on your own, because there's a lot of also jargon, legislation out there, what you can do, can't do, how to do this, percentage on that, everything like that. But that, you're right, that definitely can help reduce that income and reduce your taxes as well on that mining rewards.
Yeah. So for those that are interested, I will, obviously share my link down below for the bitcoinminingforyou.com. So you can explore that, especially if you're involved with a lot of things, you might need a write-off. And
Yes.
So that might be, again, with taxes and tax planning, you look at, your income and you look at what you're allowed to write off. And that's why having a consultant like Joshua really is helpful, because there are things that you might not know that you could actually write off. And so you might be missing out on certain things.
Yes.
So another area that I know I've played in, and we've talked about this before too, NFTs. I am a creator of an NFT. I actually had it sold, but it was such a small amount that I'm not even going to say the amount.
It's a start.
It's a start. It's a start. It was kind of fun to see on OpenSea the email that came and said your NFT was sold. And I was thinking, wow, okay.
Yes, congratulations.
Thank you. But I know NFTs, I was just doing some reading this morning. There are car companies that are actually putting contracts into NFTs to show how their car is performing. But then there are artists and musicians and other people who are creating NFTs. There are all these platforms that are popping up.
Mm-hmm.
So I guess there's two areas. You're either the creator of an NFT or you're the purchaser of an NFT. So if you're a creator of an NFT, then that might fall into the business side, especially if you sell it,
Mm-hmm.
but then you have to declare the income. Now, if you have bought the NFT, what then? I mean, how do you declare it? What about the profit? Is it, like you talked about before, an asset that appreciates like stock? Because there are really crazy situations where NFTs are being sold for millions of dollars. And so how does that work?
Yeah, no, that's a good question. So let's touch on if you're a creator of a NFT, and first and foremost, the IRS has no guidance on NFTs at the moment. Absolutely none. The only thing we could do is relate it to past guidance on other aspects that are very similar to NFTs. And what we really relate NFTs to in the IRS guide or in the IRS's eyes is collectible art.
Yeah.
That's the what we kind of relate it to. So in the case of you're the creator of the NFT and you sell it, that's business income to you. Now the question mark here is, do you charge sales tax? I could guarantee you, or I probably say a lot of people don't charge sales tax on it. But depending on which state you're actually in, you may be required to charge sales tax on that one. That's something that's, I mean, how do I put it? It's something that you should be doing. Put it like that.
So I guess the question is,
Mhm.
from a product perspective, a lot of
Mhm.
the NFTs are in online marketplaces that don't have sales tax built in.
Yes.
And then the second thing is, my understanding of sales tax is that you only need to charge it if the person actually lives in the state in which you are living. I mean, if so I guess answer that question first. Do you need to charge sales tax to someone who lives out of state?
Yes, and that's a great question. The short answer is yes, you would charge someone sales tax that's out of state. Now, there's a lot that goes into it, like a word called nexus. Do you charge them their sales tax? Do you charge them your sales tax, and how that works? Depending on your income that you have in your business, you would charge them your sales tax in your state, and then they pay it, you issue it. Now, if you have a certain number of transactions or over a certain income number, and each state's different, then you charge them their state sales tax. It's kind of similar if Amazon sending a product to you in California or in Texas, it would be two different sales tax number. But then you would voluntarily go in and distribute that to the sales tax organization.
Well, I see another challenge here.
Yeah.
When you're on the
Oh, it's
blockchain,
fun.
when you're on the blockchain, you don't always know who your purchaser is.
Mhm.
So I have no clue who bought my NFT. And
Yes.
so I don't know if they're overseas in Europe or if they're in the United States. So there's really no way for me to um, allocate sales tax to them.
Yeah, and you're 100% right. There's because that's the whole point of really the blockchain and everything like that is that it's not something you can necessarily do, but that's just one of those things where it's like a question mark on since there's no IRS guidance on it yet. It's one of those things where if we relate it to past things, it's one of the things that we should do. But really, right now, is it being done? I'll be honest with you, probably not being done. But it's something to kind of consider that legislation could come about, but it's difficult on how they would really go about actually enforcing that.
So in Sotheby's, when they sell a piece of art, do they add sales tax on?
Say that one more time.
Sotheby's, the auction place, the art auction place, when they sell a piece of art, do they add sales tax on?
They should, if they are not start charging sales tax, what they may do is they will pay you or they'll charge you a flat fee. And then from that, before they give it to the actual creator of it, they may pull out the sales tax number from there.
Interesting. Okay, so that's
Yeah.
a gray area that we need to talk about. So
Mhm.
there are certain platforms both here in the United States as well as overseas that even Coinbase offers
Mhm.
staking. So why don't staking is sort of like interest on a coin, that
Yes.
over long term, to me, the way I look at staking is it's like a CD. You've locked your coins in for a certain amount
Mhm.
of time. You get certain rewards when the time frame, you might get daily rewards or you might get long-term rewards. So what's the tax consequences of staking? Because I know so many people are thinking, oh, this is fun. I'll stake a coin. I'll do that.
Mhm.
I'll do that. But then there's the on December 31st, the realization that, oh, I have to think on what did I earn and what taxes do I pay?
Yeah. Yeah, staking, it's funny because there's a lot going on in the staking world right now. I know me and Jackie, we were talking about that article. I'm sure people would love to read that. But really, still, there's not much guidance from the IRS on staking. If we look at it, what they prefer us to do is staking is almost like we're receiving coin, which is income. The IRS kind of looks at it that way if we're relating to other aspects. And then that would be technically business income. They want you to value the coin you get on the day you get it and how much it was worth on that date. And that's also your base. It's a lot of stuff that goes into it when it comes down to staking. If it's honestly the way I believe that they should do it, and I recommend that they do it moving forward, the staking rewards is like interest income. I think that's the most common sense way to do it. But let's be honest, it's a three-digit or three-letter government agency. It may not be common sense, but it's really interest income, and it should be considered interest income. But there's no guidance on it 100% on what to do. If you consider it interest income today, you're paying less tax on it. But if the IRS goes, let's say a few months from now and says staking is actually business income, and then it's retroactive, which means all past years it needs to be business income, that can happen too. Now, with the letter me and you were talking about, Jackie,
So
I don't really.
why don't you share with everyone, because people who are listening might not know the information. Do you have it, or can you share some of the details?
Yeah. So I don't have the individual's name, but there's
That's okay.
a recent case that was really opened up where this couple they were staking and they had these rewards. They paid taxes on it. They considered it as business income, as what they thought they were supposed to do, I believe, a few years ago. And the IRS came back, or basically they went to the IRS, said, no, we want our refund because it's not necessarily business income, it's interest income. And that's how it should be classified. And IRS went through their case, read it, and they're like, you know what, you guys are right. We'll consider it interest income, but they said for you guys, not for everyone. And that's the case. So the IRS actually issued them a refund for the extra amount that they paid, considering it business income in the previous year. The issue, though, is this couple didn't have this only happen 1 year. They had it, I think it was like 2018, 19, 2020, and so forth. So they wanted to know clarification on how it should be classified every year after that. And that's where this case is at right now. And it's a big case because this could actually determine and be the first set of guidelines from the IRS on how staking rewards will be taxed, which it sounds like it should be taxed as interest income.
Yeah, so that's why everyone who's listening, myself included, it really is important to work with a professional in the tax consulting area that is comfortable researching, reading, and working in this space, because it is very technical and constantly evolving. And even though many accountants are really capable, this is not their niche. So, the more, I'm sure that there's going to be more education out there for, your profession, just like for my profession in law, there's going to be more education as well, because it is evolving and we all need to stay current. So let's see, what's the other topic that we want to talk about? The future. What do you think the tax consequences are in the future? I know that that's a really broad topic. But yeah.
I think, honestly, I think this is a big subject that the IRS wants to hop on very quickly. The issue is they want to jump on this, but they almost don't have the funding to determine and enforce all these items. And with the Build Back Better infrastructure plan, they want to give the IRS, I think it was like $80 billion to start focusing really on cryptocurrency investors and how to operate it. But I do see in the next few years that they come out with hard legislation saying this is how this is going to be taxed, this is how this is going to be taxed, and so forth and so forth. I think the staking one's going to be the next biggest one that they start talking about. And depending on what happens with NFTs over the next year, I think they'll start going into NFTs as well. And then potentially, I would like to see this if they adjust the Bitcoin mining and revisit that to determine, is that actual business income, or is it just different source of income only subject to ordinary income tax and not self-employment tax? So that's where I kind of see it going. I think the DeFi space is one that's constantly evolving and changing. So I think when something new comes out in DeFi, I think the IRS is going to be lagging a number of years before they could give ideal guidance on it. If you guys wanted to be safe when it comes down to staking, and this is, I know no one's going to enjoy this information, but you could count it as business income for your staking rewards. And then if anything happens in the next few years, you could go back and then amend your tax return, consider it interest income, and get your refund. What you don't want to do is be caught in the situation where the IRS considers it right now, considers it business income, but you're doing interest income. 5 years from now, they say, no, it's still business income. Then they find out that you weren't doing it correctly, and now you start getting letters, because they are starting to, once they get the funding, they're working with a third party consulting agency to kind of figure out how to go about tracking individuals, making sure people are paying this, doing that, and everything like that. Because I know the blockchain is to kind of keep your identity hidden almost a little bit, but there are things out there where people are starting to figure out, not necessarily figure out, but being able to track certain things on there. So definitely something I think is in the works. I do think we're a number of years out before we get all the legislation we want, and that it's constantly changing. I think that's also going to be a thing we kind of want to keep an eye out for. So it's always good to just kind of keep reading and knowing as well that something's going to be changing and you're prepared for it.
Yeah, I agree with you totally. I mean, I have my own personal opinion. I really feel, as a traveler, global traveler, that when I go to another country and I exchange my dollars for euros, and when I come back and exchange it back, I'm never taxed on my exchange of currency like that. And I personally feel that cryptocurrency should be treated in the same way. However, I understand that right now we don't have legislation like that. And so it's considered, a digital asset and not currency. But if we are going to be starting to use this currency in an ecosystem, the broad ecosystem, like Bitcoin's being used to buy real estate or to have salaries or, whatever, then we need to treat it like currency and not treat it like a digital asset. It just happens that it was created not through a Department of Treasury. It was created through a rig or a high-speed computer. But I think that now NFTs are a different animal. I think that that's a digital asset. However, we also have the problem that if NFTs are property that is then exchanged in a commercial environment with information in it, then it's a digital tool for information. It's different than when it's used for art or music. So I think that the problem is that the blockchain space doesn't fit into the normal circle and square. And so there are going to be a lot of exceptions, and that's where the challenges come, because it's not the traditional mold.
Right.
And I think that our institutions need to be thinking outside of the box instead of within the traditional mold.
Yeah.
And that's the challenge, So I'm going to be looking forward to seeing how I definitely will play by the normal tax rules now, but I really think that down the road, they need to be encouraging the creativity so there's more transparency and people are paying the taxes that they should and making it easy to pay the taxes. Because again, navigating the crypto space is very difficult sometimes. And,
Yes.
like you and I have talked about, it's really important to use some of these platforms that Joshua and I talked about to help you figure out, okay, what is your basis? What is your long-term, short-term capital gains? Because to try to do it manually, oh my gosh.
Yeah, it's not fun at all.
No.
I've definitely been there, but I completely agree with you in that case.
Yeah. So for everyone who's listening, know again that Joshua is, an excellent person to reach out to. His contact information will be in the blog below. it is important that you talk to a professional about your own personal taxes, whether it's Joshua or someone else. That the information shared on the show is just that information. It's don't take that as advice for you when you're filing your taxes. You need to do your own research. This is not financial advice, nor tax advice, nor legal advice,
Right.
because it is changing so fast. And so I wouldn't want you to take this as the gospel, so to speak. You need to do your own research and use your own personal professional consultant. So
Yes.
any last minute thoughts, Joshua? Definitely share again how they can reach you, because you're really a valuable person that I have talked to about different things. So how can they reach you?
Yes, definitely. Once again, Jacqui, thanks for having me on. Love talking with you. I think we can make this show easily like 2 or 3 hours, just getting into all sorts of different crypto stuff, the blockchain, items like that. But once again, guys, my name is Joshua Thompson. You can reach out to me. My business is Thompson Tax Group. Our website is thompsontaxgroup.com. My email is joshua@thompsontaxgroup.com. If you guys ever want to have any questions or anything like that, you can text me, give me a call at the business line at 805-364-0908. It goes directly to my cell phone. So that's what I'm here for all my clients. Just a phone call or text message away, try and be extremely available. Definitely not one of the individuals that want to keep you waiting. You have a question, it takes a week to hear back, and then you completely forgot what your question was. We don't do that. We try and get back to you within either a few hours, at worst case scenario, if not a few minutes. So once again, Jacqui, thank you for having us on.
Yeah, of course. And everyone who's listening to CryptoMom2, definitely like and subscribe. And likewise, my links will be below for the bitcoinminingforyou.com. But the other thing that I just want to mention, I've been diving more into doing research on the legal side for, the cryptocurrency, the businesses. There's so many wonderful things that are going on. So definitely reach out to me if I'm not going to be giving legal advice, but I can point you in the direction of resources, especially if you're a business looking at point of sale for using crypto, or if you're trying to find an attorney that might be more knowledgeable, in this area. Because in all these areas, it is evolving. And I know I have listeners who are both here in the United States as well as overseas. So again, my network of consultants is growing, and that's why I'm having Joshua on. And I want to provide resources to everyone. So everyone, have a great day. Remember, be kind to yourself, be kind to others. We're one large world. We're all interconnected, and have fun today. Talk to you soon.